Good day and welcome to the D-Marq-AnalyticS channel. We would like to begin by apologizing for having been gone for a while, but we assure you that we are back stronger, and after rigorous research we will be bringing you a set of 12 videos covering 60 stocks that have outperformed the S&P 500 in the past decade that are either in our current portfolio or our watch list. Buckle up for this one. For this week, we will be looking at batch 2 of 12 of 5 stocks. This is just a suggestion for you all to consider and research, and certainly not financial advice. Let's get started. The first stock in our video today is the A stock that is in the construction and engineering industry, and that is one of our highest performers. The stock is Sterling Infrastructure Inc., ticker STRL. Sterling Infrastructure Inc. is a dynamic construction company dedicated to building progress through heavy civil infrastructure and residential projects. It operates in 3 impactful segments: transportation solutions, e-infrastructure solutions, and building solutions. Transportation solutions connect communities through highways, bridges, and light rail. Building solutions create solid foundations for homes, nurturing families. E-infrastructure solutions empower blue-chip companies across e-commerce and energy sectors, driving innovation. With most revenue from e-infrastructure solutions, Sterling is committed to forging a brighter, connected future. Its stock had tremendously better total returns when compared to the S&P over the past decade and even recently. Since we invested in it, it has had an internal rate of return of 139%. It has a return on invested capital of 19.86%. It has a levered free cash flow of $246 million, a current ratio of 1.42, and an Altman Z Score of 4.34, with no short-term debt. Sterling Infrastructure has achieved remarkable growth in both revenue and profit margins, propelled by significant capital commitments from industry giants like Meta, Amazon, and Walmart. This strong momentum is a testament to the company's diverse high-margin segments and strategic acquisitions, such as the CEC Facilities Group, which enhance earnings and scale. The high demand in the e-infrastructure segment, particularly in data centers, showcases a promising future filled with opportunities. With solid financials and a leverage ratio well below 1x, along with strong liquidity, Sterling Infrastructure is poised for continued success. Second stock in our video today is Royal Gold Inc., ticker RGLD, in the materials sector for gold, silver, copper, nickel, zinc, and lead. Royal Gold Inc. specializes in managing precious metal royalties and streams, primarily focusing on gold. The company purchases a percentage of metal produced from mineral properties without taking on mining responsibilities. Through visionary agreements with mine operators, Royal Gold secures the right to buy metals in exchange for an upfront deposit. Typically, the company allows its royalty and streaming assets to thrive independently. Its diverse portfolio includes producing, development, evaluation, and exploration royalties and streams, mainly generating revenue from Canada, Mexico, Chile, and the United States. It has a very fast dividend growth rate of 12.5%. It has a levered cash flow of $215 million, a current ratio of 4.49 with a very high Altman Z Score of 23.56. It has no short or long-term debt. Royal Gold is on the brink of achieving record cash flow in 2025, fueled by rising gold prices and substantial contributions from key assets like Mount Milligan and Rainy River. The company's focus on streaming and royalties empowers it to limit operational risk while securing stable cash flow and impressive profit margins, making it a remarkable investment even in turbulent markets. With strategic acquisitions and no long-term debt, Royal Gold is expertly positioned for future growth and potential dividend increases, elevating shareholder value and inspiring confidence in its prospects. The third stock in our video today is Wheaton Precious Metals Corp., ticker WPM, in the materials sector for gold, silver, palladium, platinum, and cobalt, with a wide economic moat. Its stock had better total returns when compared to the S&P over the past decade. It has a levered free cash flow of $602 million, a very high current ratio of 11.38 with no short or long-term debt, and a very strong Altman Z Score of 61.45. Since we have invested in it, it has had an internal rate of return of 49%, and it has a return on invested capital of 10%. The fourth stock in our video today is Intuitive Surgical Inc., ticker ISRG, in the healthcare equipment industry. Intuitive Surgical is at the forefront of revolutionizing healthcare by designing, manufacturing, and marketing an innovative robotic system that enhances minimally invasive surgery. Alongside this cutting-edge technology, the company provides essential instrumentation, disposable accessories, and comprehensive warranty services. With over 9,500 Da Vinci systems installed in hospitals globally, including more than 5,500 in the United States and a growing presence in emerging markets, Intuitive Surgical is dedicated to transforming lives through advanced surgical solutions. Despite recent underperformance, we believe that this technology is a long-term play and can have a potential future growth. With significant investments in research and a strong patent portfolio, Intuitive demonstrates continuous innovation and technological leadership. The company's business model creates high entry barriers with integrated instruments and accessories that establish substantial switching costs for customers. This approach not only drives a robust recurring revenue stream, but also solidifies Intuitive's leadership in the surgical robotics industry. ISRG has a levered free cash flow of $1.82 billion, a current ratio of 5.17, no short or long-term debt, and a very high Altman Z Score of 51.69. The fifth and final stock in our video today is Arista Networks Inc., ticker ANET, in the communications equipment industry. Arista Networks is a leading provider of networking equipment, specializing in Ethernet switches and software for data centers. At the heart of its innovation is the Extensible Operating System, EOS, which unifies all its devices under a single operating image. Since its inception in 2004, the company has steadily captured market share, driven by a commitment to high-speed applications. With influential clients like Microsoft and Meta Platforms, Arista embodies the spirit of progress and transformation, deriving approximately 3/4 of its sales from North America. Since we've invested in it, it has an internal rate of return of 38% and a return on invested capital of 31%. Its stock has had better total returns when compared to the S&P 500 over the past decade and recently as well. ANET has a levered free cash flow of $3.33 billion, no short or long-term debt, a current ratio of 3.33 and an Altman Z Score of 15.20. Today we have looked at 5 solid stocks that we currently hold in our portfolio that we thought would be good to analyze and present to our valuable subscribers. Kindly check the description for terms and tickers used in this video. At the end of the 12 batch winning stocks videos, we plan to release a special video for you all where we will share our winning strategy that helped us outperform the S&P 500 since we've created our portfolio last year with a total IRR on the portfolio of more than 50%. We would like to thank you all for staying till the end, and we wish you all have a successful investment journey.